Today, we are looking at Adobe stock and how the company is down 45% in the last 4 years, potentially creating one of the best buys in the entire stock market. So there's been major concerns about Adobe and how they are going to compete with many artificial intelligence competitors. There's literally hundreds of other companies now that offer photo editing, photo generation with AI, even full-on video production, animation, short films you can make through names like Google's Gemini. And many companies offer their services free for maybe 10 times a day. So why would you spend $600 subscribing to Adobe and their products? I'm going to give my opinion on this today, as well as go through the very cheap valuation, the cheapest that Adobe stock has ever been. Before we get into that, I just want to update you on the growth on sale portfolio. I'm going to add around $300 to this every single week, and the latest purchase in this portfolio was indeed Adobe stock. So let's just see if that was a great choice or not, but let's answer that by getting straight into the business model of Adobe. Back in the day, they used to sell you discs of Adobe Photoshop, photo editing software. You'd buy it for $100, but then you would own it forever until they gave you an updated version. However, around 2012, they switched to a subscription model. So if you just own Photoshop, for example, in Australia, that costs you around $31 every single month. If you wanted the entire suite of products, that would charge you around $48.50. However, that is on sale at the moment. Usually that's around $97 every single month. At first, that sounds entirely nuts. Who would spend that much money on just a single product, a single subscription? Things like Microsoft Office only charge you around $180 a year now. However, we need to keep in mind the types of people who can actually spend that money. So you have people that do photo editing professionally, things like advertisers or maybe professional photographers might use Photoshop. But you also have places that are kind of grandfathered in. They are expected to use these top quality software products. So names like universities and schools, it's pretty much expected. We don't really know exactly the breakdown of the different categories of who uses Adobe, but it's safe to say a far majority of that subscription revenue is very, very safe. We can see ever since that 2012-2013 switch to the subscription model that the revenue for Adobe has just taken off like a rocket. The growth rate has slowed down from the 20% yearly growth back in that 2018 time period. Now we're only expecting around 9.5% yearly revenue growth. And we might as well talk about all the financial company-wide data here about Adobe, and it's all going back to that software model on subscription. It's a really high margin business, as we can see here with the different types of profit margins. I'm just going to talk about the operating profit margin, which is sitting at around 36% now, but over time, this is just going to get more and more profitable. If you're just paying for a little bit of advertising, a little bit just to spruce up your software, then most of your revenue dollars are going to go straight to your bottom line. And this story is only going to get better and better, especially in the age of AI. Now, many people are saying AI is going to hurt Adobe's business. Yes, it might shave off a few percentage points off their revenue growth over time, but I think we are going to make up for that in terms of the higher profit margins, because every single software company in the entire world, I will bet my left nut here and say they are going to slowly get rid of employees or put on hiring freezes because they can just replace people with artificial intelligence. It's commonly known now that around 30% of all code is being written by AI, and the same thing is going to happen with Adobe. And if we just have a look at the number of employees at Adobe, we're sitting at around 30,000, but I don't think we're ever going to see again at Adobe these big increases of 5,000 employees in a couple years. They just don't need them anymore. Every single one of those entry-level software programmers or even middle-tier players, they're just going to slowly get replaced. So if we add together the revenue growth story, which is expected to be around 9.5%, maybe down to 9, but we add on an extra few percentage points of profit margin, we're starting to see profit growth expectations around 11%. Just for those reasons. If we also add in the picture of the cheap valuation, and that's resulted in share buybacks with Adobe, they're now buying back around 5% of total shares at the yearly rate, mainly because the company is just extremely cheap. The PE ratio of Adobe is by far the cheapest that it's been in the entire company's history. Yes, the PE ratio is above 20 right now, but going back throughout history, it used to hover between a 30 and a 60 because it has that reoccurring revenue that is considered extremely safe. So if we have a look at the profit expectations of this year and 2026, let's just say the 1 year forward P ratio is around a 17. So that would be about a half of what many people expect Adobe's valuation to be. So we could see the stock price of Adobe double just to go back to old school valuations. I believe that's a bit too aggressive for me personally. I think something like a forward P ratio of 25 would be more appropriate because the revenue growth just won't go back to those extreme levels. That's enough of the financial details. Let's address the biggest concern with Adobe stock, which is how is it going to fight for its position against all of these artificial intelligence companies. They have here the big growth area in the future is business professionals and consumers. People want quick AI-powered tools that are quick and easy to use, and maybe they charge people $10 a month, and maybe they're going for higher numbers of members rather than charging people top dollar. And even the traditional Adobe products like Adobe Photoshop, that's probably still going to grow total subscribers by 3-4% a year anyway. I'm also going to pick out a few extra things from the last quarter's report. So they have here their digital media arm of the business, basically the entire thing, that is growing at revenue growth of 11%. But if we only focus on subscription revenue, which is pretty much almost all of it, they're growing revenue at 12%, which is faster than what their current expectations are. So they're already beating what analysts are predicting for 2025, but we've also got some extra quotes here that are extremely positive. First up, we have students absolutely gobbling up the AI type products, Adobe's AI Assistant and also Adobe Express, which is kind of like a very quick and easy photo editing product. I think they might do video as well. It's very similar to Canva, but I think the tools on this Adobe Express are much more artistic and attractive. I'm not the biggest fan of Canva actually. The amount of revenue generated from students alone, so the future users of Adobe's products, are up 75% year over year. Businesses are also aggressively signing up for Adobe Express. 35,000 individual businesses have signed up for Adobe in the last quarter alone, where 8,000 specifically signed up for Adobe Express. The amount of businesses joining Adobe Express has ×6 compared to the same quarter in last year, suggesting there's quite an aggressive acceleration. So there's more people signing up and people seem to be using it more and more, where the total usage just from Q1 this year to Q2 is up 200%. And compared to 12 months ago, its usage is up ×11. With the popularity from businesses, that's translated to a 15% revenue growth number just from those sources. Addressing how much money Adobe is making off artificial intelligence products alone, because that's just one of the biggest reasons investors are not buying Adobe, they are looking at hitting a yearly run rate of $250 million of subscription revenue by the end of the year, and reportedly they are ahead of this schedule. Putting all of that together, it's extremely positive, and personally the reason why I'm buying into Adobe is I think they have easily fought off these AI concerns. Not every single company needs to win the entire market. They only need to carve out a slice for themselves. The total artificial intelligence pie is growing so fast, you don't need to be number one one, or you don't need 100% market share. So Adobe is looking like it's setting up for revenue acceleration, not decline. So we could see revenue growth going at around 11%, 12%, if they can really hone in on these AI products. If you add on that 4% share buyback rate with a few percent coming from better profit margins, then overall we could be expecting, around a 16, 17 yearly profit margin per share moving forward. If we start to piece this together on the price chart of Adobe, now I've just got a few little targets there using that forward P ratio of around a 25 as a guide. I'm hoping to see Adobe get to 530 in about 12 months time per share. And then the year after that, end of 2026, around a 600. Now I've got those levels with the help of the volume chart on the screen as well. So there's naturally these levels in Adobe stock that have been left behind due to its price history. So it seems like every 10%, that could be a bit of a hurdle for Adobe to overcome. I think this could just cause sell-offs in the stock, creating even better opportunities to buy over the next couple years. Every single price drop in Adobe stock is just another gift for us to latch onto and try to make some decent profit. If you like the content, make sure you subscribe and keep following the journey of the channel and the portfolio. See you guys next time. Bye.